Let's make a quick look through the analysis of euro crosses. And today, as you know, the situation is more or less under control of the news coming from Syria, where United States, UK and France are still conducting or promise to resume a kind of military strikes against Syrian authorities of Bashar Assad and its troops and his troops. And from that point of view, anyway, as you can see, the risk aversion situation is more or less very quiet at the moment. That's why probably such kind of currencies like Euro Yen and Euro Swiss still feel themselves rather well to resume its current kind of bullish phase. As regarding the Euro Yen, here the situation, let's see the chart. Here the situation is still rather well supported. The pair is looking rather well supported. Let's see and let's draw a kind of short-term intermediate kind of trend uptrend line, which, as you can see, intersects around 130 140. Probably while above that line, the euro yen could remain under uptrend pressure. But from the point of view of technical perspective, we suggest that while below technical resistance around 133, the pair should be looking weak from a longer term point of view. That's why we still prefer to keep our short trade recommendation in the currency and probably to add to existing short position at 133 with a stop above 133.50. The euro sterling, which made an important penetration during the course of last 2 weeks, is trading below 87. As you can see here on the chart, the pair is still trading below its longer term downtrend line located at 88.95.89. Also here lies a moving average 200 daily line at 88.86. So while below both of these lines, we remain bearishly thinking regarding the pair and should be use any kind of upticks to establish new short positions in the currency. The euro Swiss, here the situation is a little bit different. As you can see, the pair is still very well supported despite of the situation in, for example, in Syria. And here, by the way, we also can draw a kind of short-term intermediate uptrend line, which today lies around 118.10. Probably while we're trading above that line from a shorter term period of view, the pair should remain very well supported to retest the very important, psychologically important line defended by S&P in 2011-2014, the level of 120. We also, as you can see in our strategy list, we are ready to sell the pair at 119.70 with a stop above 120. For those thinking that the pair should remain supported in the near term, we advise to start buying the currency at 116.60 with a stop below 115.85. Also, we pay your attention on a kind of a longer term uptrend line that intersects today at 116. And finally, the euro ruble, which opened a little bit higher because of a rising kind of chances for a new sanctions against Russia. This time from the side of UK and the United States. We're still seeing that the Anglo-Saxons still chasing the strategy on further dampening the Russian economy. And from that point of view, probably the Russian ruble should remain a little bit weaker at the moment. Anyway, from a longer term perspective, we still suggest that there should be a kind of very strong interest to sell the euro ruble above 80, probably from the name of official sites. At the moment, that's all. Some later we will come with our strategy regarding commodity block of currencies.